Thank you for joining us as we begin Year 3 of Health Insurance Coverage Reporting. My name is Lisa Duquette, and I'm the Executive Director for SchoolCare. I'm joined today by Melissa Perot, our Associate Executive Director. This presentation is a refresher for those large employers with 50 or more full-time equivalent employees. As always, if you have specific questions pertaining to your reporting or ACA as a whole, please be sure to check with your legal counsel. This presentation is not intended as legal or tax advice, but rather to provide information about legislative changes impacting health insurance reporting. Our agenda for today will start with a review on the background of 6055 and 6056, covering the who, why, how, and when of reporting. Then, we'll briefly touch upon 2017 updates. Those of you who have more than 50 employees or full-time equivalents report under 6055 and 6056 using IRS Forms 1094 and 1095-C. Some of our member groups have received letters from the IRS in the past, so we'll spend a couple minutes explaining how SchoolCare can assist you. Finally, we'll move to next steps. You will also notice the Certified Healthcare Reform Specialist seal. As an FYI, we have staff members who have achieved this designation and are ready to assist with any questions you might have. Before we begin, as a reminder, SchoolCare offers self-funded plans. Therefore, SchoolCare medical benefits provided are considered self-funded. You may hear of others in the private sector talking about fully insured plans, but we won't be discussing those requirements as they are not relevant to SchoolCare members. The IRS created 6055 and 6056 codes for ACA. They apply to different groups. Entities reporting under Section 6055 must show they are in compliance with offering qualifying health coverage, minimum essential coverage, or MEC. All SchoolCare plans provide minimum essential coverage, regardless if they're being offered by a small or large employer. Although small employers are not affected by the employer's shared responsibility, pay or play provisions, still small employers must report under 6055 because a self-funded medical plan is being provided to employees. A reminder, all the small municipalities and school districts that are part of SchoolCare are required to report under Section 6055. In both cases, employers will have to file with the IRS and send individual statements to employees. Applicable large employers, remember those having 50 or more full-time equivalents, will also report under Section 6056. Full-time equivalent is defined by employer shared responsibility provisions. For this webinar, we'll focus on Section 6055 and 6056 reporting for applicable large employers. We do have another recorded webinar available that speaks specifically to 6055 reporting for small employers. As stated previously, reporting of self-funded plans apply to all SchoolCare groups regardless of size. If there are early retirees, COBRA participants, or non-employees covered under the plan, they must be included in the reporting. Here are a couple examples. Part-time support staff with negotiated health insurance in a contract would need to be reported. A non-employee, former employee, for example, widowed spouse, dependent age 26 or older that now has their own COBRA coverage, you must include all of them in your reporting. Regarding retirees, you do not need to report for retirees who are enrolled in the SchoolCare 65 Plus plan. Self-funded health reimbursement arrangements, or HRAs, do not need to be reported separately if the HRA is tied to a major medical plan, such as SchoolCare's Yellow Open Access with Choice Fund. Said another way, because the Yellow Plan's HRA is embedded into the plan design and supplements the primary medical coverage, the HRA does not need to be reported separately. We hope that you already know if you're a large employer or not. However, we do know that some employers are on the border of the threshold of 50 full-time employees. This slide applies to employers who have less than 50 full-time employees, but have part-time employees as well. You will have to add in the collective hours worked by part-time employees to determine the number of full-time equivalents. To determine if you are an applicable large employer, or ALE, in 2017, you need to look back to each month in the 2017 calendar year to determine if you have 50 or more full-time equivalents. As an example, take January 2017. Add up all full-time employees who work 30 hours a week or 130 hours or more during the month. Each of those counts as one. Take everyone else who works less than 120 hours per month. Those hours get aggregated together, then divided by 120. Now you have your number for January. Do the same calculation for each month during 2017 and then divide by 12. If you have an average of 50 or more full-time equivalents, then you need to do reporting as an applicable large employer, or ALE.
In terms of updates for 2017, there have been minimal changes for the calendar year. First, certain forms of transition relief are no longer applicable. Second, the affordability threshold has increased. And finally, pay-or-play enforcement is beginning. The IRS will be sending out letters by year end. If you receive one, you must reply within 30 days. As always, if you need assistance or have questions, SchoolCare is here to help. Now, let's move on and talk generally about the whys of reporting. So what is the IRS doing with this information? With reporting for Code 6055, the IRS can administer the individual mandate. We, as individuals, are required to have health coverage or be subject to penalties. With reporting for 6056, the IRS can determine if the employer has made an offer of coverage to eligible employees and also determine if it's affordable. If the plan is not affordable, the employee could be eligible for a subsidy to assist in the cost of a marketplace plan. Let's also remember, ALEs are doing combined reporting in this section, so in addition to employer mandate components, the IRS will also determine if the individuals of ALEs have enrolled in health coverage or be subject to penalties. So 6056 covers many parts for ALEs. Was coverage offered? Did the employee take it? Or is the employee subject to a penalty? If coverage was offered, was it affordable? If not, is the employee eligible for a subsidy and the employer subject to penalties? Remember, despite SchoolCare's July to June plan year, employers must report on the calendar year. Individual statements are due each year by January 31st. You can furnish individual statements electronically if you obtain permission from employees. IRS reporting is due February 28th for paper filers or April 2nd if filing electronically.
Now that we've gone through the who, the why, the what, and the when, let's move on to the how. We'll take a look at how to complete the 2017 IRS Forms 1094 and 1095-C. 6056 ALE reporting. You'll need to report that an offer of coverage was made, that it met minimum essential coverage, or MEC, and provided minimum value. All SchoolCare plans meet this criteria. You'll also report on every employee to whom you made an offer of coverage, whether they took the coverage or not. So for example, if you have a part-time employee working 25 hours and you offered coverage for which that employee enrolled, you must report on that individual. On the other hand, if you have a full-time employee who you offered coverage to and declined, again, you must report on that full-time employee who declined coverage. Reporting is required for every full-time employee, no matter how short their term of employment. You must also report on those who are no longer your employees, such as retirees and those on COBRA. The required forms are the 1094-C transmittal and the 1095-C individual forms to the subscriber.
To offer full disclosure, self-funded ALEs may use Form 1094 and 1095B instead for non-employees covered under the plan, such as early retirees, COBRAs, or widowed spouses. However, for consistency, you may want to use 1095C for all. An ALE that offers health coverage through an employer-sponsored self-insured health plan must complete Form 1095C, Parts 1, 2, and 3 for any employee who enrolls in health coverage, whether or not the employee is a full-time employee for any month of the calendar year. Now, let's talk more specifically about Form 1095C. On Form 1095C, we'll begin with Part 1. Here is where you enter basic contact information for the employee and applicable large employer. For Part 2, here is a listing of codes to be used on line 14. The most common codes are 1A, 1E, and 1H. We will be providing more details on each code as we move through some specific examples. These are a continuation of codes to be used in Part 2 on line 16, but these codes are safe harbor codes. The most common codes here are 2A through 2D.
Under IRS Section 6056, there are 3 safe harbor provisions that require a little additional explanation. They relate to the ability for an employer to avoid penalties. They include a safe harbor for federal poverty line, Form W-2 wages, and rate of pay. We'll show examples of each of these. What's important for you to understand is that employers may choose to use one or more of the safe harbors for all of its employees or for any reasonable category of employees. So it must be uniform and consistent basis applied to employees. The affordability test applies to the lowest cost, self-only option available to the employee. And remember, as employers, you want to identify if one of these 3 safe harbors is applicable that you can use in your reporting to avoid penalties.
Now, let's begin digging into some specific examples using Form 1095C. For the first 5, we'll assume the following. The employer is an ALE with at least 50 full-time employees or equivalents. The employer offers coverage through SchoolCare and therefore is considered self-funded. The SchoolCare plan year begins in July. All employees are offered family coverage and enroll when offered unless otherwise stated in the example. And the employer treats coverage as affordable based on the federal poverty line safe harbor. So here's our first example. John is a veteran full-time health insurance eligible employee, enrolled in the SchoolCare Green Plan all calendar year. He, his spouse Julie, and child Jonathan have family coverage. His employer offers the SchoolCare Red and Green plans. The lowest cost plan is the Red plan at $778 per month for single coverage. The employee cost share is 10% or $77.80 per month. The Red plan cost increases on July 1st to $817 per month, and the employee cost remains 10%. The $77.80 per month and $81.70 per month satisfy the federal poverty level standard of $97.38 per month. Taking a look specifically at Form 1095C, let's first talk about Part 1. Part 1 contains John's information as the employee on lines 1 through 6. This includes his name and address. Lines 7 through 13 are more specific to the applicable large employer. On these lines, you'll want to enter the ALE's name, employer identification number, and contact information. For Part 2, the first piece of information to enter is the plan start month. This is not when the employee begins their coverage. All SchoolCare plans begin in July, so 07 is noted. For anyone who enrolled in coverage at any time of year, you'll still use 07. There is an exception that we'll go into later on, where you would use something other than 07 as a code. There is one exception to this that we'll discuss later on. Moving down to line 14, code 1A is used as a qualifying offer due to coverage satisfying the 2017 federal poverty level standard. Line 15 is left blank, which we'll explain in a moment. Line 16 is code 2C, as John enrolled in coverage all 12 months. Now let's talk specifically about line 15. In future examples, line 15 may contain the employee's cost share for the lowest cost plan offered. When using code 1A on line 14, however, line 15 is left blank due to federal poverty line standards being met. A qualifying offer is by definition treated as an offer that falls within an affordability safe harbor. An ALE member is not required to use the qualifying offer method, even if it is eligible, and instead may enter on line 14 the applicable offer code, and then enter on line 15 the employee required contribution. Moving down to Part 3, the box indicating the employer provided self-insured coverage is checked at the very top. In column A, John and his family are listed. In column B, all Social Security numbers were provided. Column C is left blank as it's not needed. Date of birth should not be entered when Social Security numbers are entered in column B. Finally, coverage was ongoing all 12 months for all members of John's family. Thus, column D boxes are checked.
For example 2, we'll take a look at a new hire. Caitlin is a new full-time employee on August 24th, 2017, and she's eligible for coverage on the first of the month following her date of hire. She's offered and enrolls in coverage as of September 1, 2017 in the SchoolCare Green Plan and remains enrolled in that plan through December 31st. She takes single-only coverage. The employer offers the green and red plans. The lowest cost plan is the red plan at $847 per month for single coverage. The employee cost share is 15% or $127.05. In regards to the safe harbor, this employee cost share does not satisfy the federal poverty level standard for 2017 of $97.38 per month. As we move to completion of the 1095-C forms, Melissa and I won't be reviewing the information in Part 1 as it's straightforward with the subscriber or employee information and employer information. Instead, we'll move right on to Part 2. As we go to Part 2, the employee cost share, the plan start month is 07 as Melissa indicated previously. Then we move on to line 14 for the offer of coverage. For the months of January through August, we'll use code 1H because there was no offer of coverage. But beginning in September through the end of the calendar year, we'll use code 1E. Caitlin was offered minimum value coverage to she, her spouse, and dependents. On line 15, we don't complete anything for the months in which she was not covered or offered insurance. However, beginning with the month of September, we must list the lowest cost employee share of health insurance for the months that Caitlin was enrolled. And as indicated on the previous slide, that's $127.05. For line 16, we have several codes that we need to use. For the months of January through July, Caitlin was not employed, so we're going to use code 2A. In August, however, Caitlin was employed, but she was not offered coverage. So we would use code 2D. The employee is in a non-assessment period or waiting period. And beginning in September through December while she had coverage, we would use code 2C, enrolled in coverage. And lastly, Part 3, here's where we list the covered individuals. We must first start at the top of this section to the far right and be sure to put an X in the box to indicate that the employer provided self-insured coverage. Then Caitlin's name is listed under column A, her Social Security number under column B. As indicated before, do not fill in the date of birth if you've got the Social Security number. And we're not able to use column D because she was not covered for all months. So instead we move to column E and put a X in the boxes for the months of September through December to indicate that those were the months that she had at least one day of coverage.
Example 3. Lawrence is a new full-time employee hired on August 31st, 2017. He and his wife Linda are enrolled in two-party coverage August 31st through November 22nd, and family coverage after the birth of baby Lucy, from November 23rd through the end of the calendar year. The employer offers the SchoolCare Yellow Plan only. The Yellow Plan is $653 per month for single coverage, and the employee cost is 5%, or $32.65 per month. For the Safe Harbor, the $32.65 satisfies the federal poverty level standard. Moving down to Part II, again, the plan start month of 07 is noted at the top. On line 14, code 1H is used for January through August, as no offer of coverage was made. Although Lawrence enrolled in August, it was not for the entire month, thus code 1H must be used. As a qualifying offer meeting federal poverty line affordability standards was made through the rest of the year, code 1A is used September through December. Line 15 is left blank due to codes 1H and 1A being used. In line 16, code 2A is used January through July, as Lawrence was not employed at that time. Code 2B is used in August, as Lawrence was not employed the entire month. Code 2C is then used for September through December, as Lawrence enrolled in coverage. In Part 3, the box to indicate the employer-provided self-insured coverage is checked. Lawrence and his family are listed in column A. Column B lists Social Security numbers for Lawrence and Linda. You'll note baby Lucy's Social Security number was not provided, thus her date of birth must be entered in column C. Both Lawrence and Linda had coverage at least one day per month, August through December, so those boxes are checked. Baby Lucy was born November 23rd, so November and December are checked for her.
In example 4, we have Martin, who retired in 2013 and remains enrolled in the employer's group-sponsored health coverage as an early retiree. Martin is enrolled January 1, 2017 through December 31, 2017 in the SchoolCare Red Plan. He has single coverage. Since he is a retiree and not employed any time during the year, the lowest cost individual plan and Safe Harbor are not applicable. We'll go right to completion of Part 2 of the form and be sure to mark 07 in the plan start month. Martin's form is quite simple to complete. On line 14, we're going to use code 1G, indicating that he is a part-time employee or non-employee covered under a self-funded plan. We do not need to fill out any information for lines 15 or 16 as they relate to the lowest cost plan and Safe Harbor codes. And in Part 3, be sure to check the box at the top to indicate the employer-provided self-insured coverage, then indicate Martin's name under column A, his Social Security number under column B, and under column D that he had coverage for all 12 months. So what about this non-employee coverage and the use of code 1G? Code 1G can be used when you have an individual enrolled in coverage under the plan for one or more calendar months of the year, but was not an employee for any calendar month of the year. If 1095C is used with respect to this individual, then you can put code 1G on line 14 and check off all 12 months box. Or you may use separate monthly boxes for all 12 calendar months.
Example 5 is an existing employee with a COBRA event as of June 30th, 2017. Nancy is a full-time health insurance eligible employee since 2010. She voluntarily terminated at June 30th and accepts COBRA for family through December of 2017. Her coverage again is family. The employer offers the SchoolCare Red and Green plans. The lowest cost plan is the Red plan at $774 per month for single coverage. The employee cost is 15%, or $116.10 per month. The cost increases at July 1st to $844 per month, plus 2% COBRA administrative fees, for a total of $860.88 per month. The $116.10 per month does not satisfy the federal poverty level standard of $97.38 per month. Moving on to Part 2, again, code 07 is entered for the plan start month. On line 14, code 1E is used as minimum value coverage was offered to Nancy and her family January through June. As a former employee employed during the calendar year, Code 1H should be used for July through December. In line 15, the employee cost share for the lowest cost plan available is noted for the months Nancy was employed. It is not necessary to enter this for July through December, as Nancy was not an employee at that time. Line 16 uses Code 2C, January through June, as Nancy was an employee who enrolled in coverage. July through June, Code 2A is used, as she was not employed. Part 3, covered individuals. Again, the employer provided self-insured coverage box is checked. Column A contains Nancy and her family's information. Column B has all Social Security numbers noted. Column C is skipped, and column D is checked for each family member, as all had coverage for all 12 months. That last example may have been a bit confusing, so let's take a look at IRS guidelines around former employees. For former employees on COBRA, IRS guidelines state an offer of COBRA continuation coverage that is made to a former employee due to termination of employment should not be reported as an offer of coverage on line 14. In this situation, Code 1H must be entered on line 14 for any month for which the offer of COBRA continuation coverage applies, and Code 2A must be entered on line 16 without regard to whether the employee or spouse or dependents enrolled in the COBRA coverage. So what about COBRA for someone who remains employed? If a COBRA participant remains employed, an offer of COBRA continuation coverage should be reported on line 14 as an offer of coverage, but only for any individual who receives an offer of COBRA continuation coverage. Generally, an offer of COBRA continuation coverage is required to be made only to individuals who were enrolled in coverage and would lose eligibility for coverage due to a COBRA qualifying event. But an ALE may choose to extend a similar offer of coverage to a spouse or dependent, even if the offer is not required by COBRA.
Let's move on to the next 5 examples with a new set of assumptions. In these examples, the employer is an ALE with at least 50 full-time equivalent employees. The employer offers coverage through SchoolCare, which is considered self-funded coverage. The SchoolCare plan year begins in July. All employees are offered family coverage and enroll when offered unless otherwise stated. The major difference in these examples is that the employer treats coverage as affordable based on Form W-2 wages safe harbor. For examples 6 and 7, we have spouses who work for the same employer, not uncommon for our large employer groups within SchoolCare. In the first example, Stephanie is a full-time health insurance eligible employee. Her husband Timothy, also full-time and health insurance eligible. He, however, waives coverage and is enrolled under Stephanie. So Stephanie has enrollment for herself and her spouse, 2-party coverage, for the entire calendar year. The employer offers the SchoolCare red and green plans. The red, of course, being the lowest cost plan at $778 a month for single coverage. The employee cost share is 13% or $101.14 per month. The red plan does increase at July 1 to $817, and the employee cost share remains 13%. Using the safe harbor for W-2 wages, the $101.14 and then the increased cost at July 1 to $106.21 do satisfy the W-2 wage safe harbor, which is less than 9.69% of Stephanie's 2017 W-2 earnings. With this information, we're now ready to complete Stephanie's 1095-C. In Part 2, the employer offer of coverage, be sure to enter 07 for the planned start month. When you move to line 14, all 12 months, Stephanie was offered minimum value coverage to she, her spouse, and dependents. For line 15, the employee required contribution for single coverage must be indicated for all 12 months. And on line 16, Code 2C would be entered, enrolled in coverage. Now you might think, why are we not using code 2F on line 16, which is that the coverage meets the W-2 affordability safe harbor? The reason we don't use that is the instructions for this IRS form indicate that you should always use 2C over any other code if applicable. So that's the reason we're using 2C and not 2F. For Part 3, again, be sure to check the box at the top indicating employer-provided self-insured coverage. Under the detailed section for the covered individuals, both names are indicated along with their social security numbers in column B, and in column D, we're going to check off that they were covered all 12 months. At this point, we're not done with Stephanie and Timothy yet, because we must report that Timothy was an employee and offered coverage. So for his 1095-C form, be sure to give him his own as well with his name listed in Part 1. In Part 2 of the form, be sure to enter 07 for the plan's start month. Even though Timothy did not enroll in coverage, that is the month that the plan began for which he was offered coverage. On line 14, use code 1E, indicating he was offered coverage for himself, spouse, and dependents. You'd list the same cost share for Stephanie on line 15, but on line 16, this is where you would use code 2F, that it meets the W-2 affordability safe harbor. And for Part 3, you would leave it entirely blank because Timothy did not enroll in his own coverage.
Example 8 is a new hire who waives coverage. Ugo is a new full-time employee hired on March 2nd, eligible for health insurance on the first of the month following his date of hire, and decides to waive coverage. His employer only offers the SchoolCare Red Plan. The Red Plan is $731.50 per month for single coverage. The employee cost is 25%, or $182.88 per month. The Red Plan cost increases at July 1st to $761, and the employee cost share remains 25%. The $182.88 per month satisfies the W-2 wage safe harbor. However, the increased cost of $190.25 per month at July 1st does not. For Part 2, again, for plan start month, enter 07. For line 14, no offer of coverage was made January through March, so code 1H is used. A minimum value offer of coverage was made to Ugo and his family, April through December. Thus, code 1E is used. In line 15, the employee contribution to the lowest cost health plan offered is noted for April through December, as Ugo was eligible and offered coverage those months. You'll also note the increase in cost in July on line 15. On line 16, code 2A is used in January and February as Ugo was not employed. In March, Ugo was employed, but in a waiting period for coverage. Thus, code 2D is used. Code 2F is indicated April through June as coverage satisfied the W-2 safe harbor provision. You'll note that there are no codes used July through December on line 16, as none are applicable, and coverage does not satisfy the W-2 wage safe harbor these months. Moving down to Part 3, you'll note that it is entirely left blank, including the top box indicating employer providing self-insured coverage, as Ugo did not have coverage or enroll.
Example 9. We have a full-time employee not offered coverage. Victoria works 31 hours per week, but is not offered employer-sponsored health coverage. When we go to complete Victoria's form, we fill in her information in the top section, and in Part 2, here's our exception for the plan start month. Because she was not offered coverage, the plan start month is 00. For line 14, we're going to indicate that there was no offer of coverage for all 12 months using code 1H. There are no further entries on line 15 or 16. And in Part 3, as we've seen for other individuals who've waived coverage, the same applies to those who are not offered coverage. Part 3 is left entirely blank.
Example 10 is an employee who retires during the year. Wendy is a full-time health insurance eligible employee who retires August 31st and remains enrolled in the employer's group-sponsored health coverage through the end of the calendar year. Her coverage is two-party for herself and her spouse William. The employer only offers the SchoolCare Green Plan at $876 per month for single coverage. The employee cost share is 20%, or $175.20 per month. Cost increases to $893.50 per month at July 1st, and the employee cost share remains 20%. As of September 1st, as a retiree, Wendy pays 100% of the cost. The $175.20 and the $178.70 satisfy the W-2 wage safe harbor. For Part 2, enter the plan start month of 07. In line 14, Code 1E is entered through August, as an offer of coverage was made to Wendy and her family. As Wendy retired 8/31, Code 1H is used September through December. Line 15 contains the applicable employee cost share for the plan offered for the months Wendy was employed. September through December is left blank, as Wendy was retired. Line 16 uses Code 2C through August, as Wendy enrolled in coverage. 2A is used for the months Wendy was retired, as she was not an employee. For Part 3, the box indicating employer-provided self-insured coverage is checked. Wendy and her husband's information is listed, along with their Social Security numbers. And Box D has all 12 months of coverage checked. Although Wendy was retired, she and her spouse were still enrolled and had coverage all calendar year.
Moving on now to the next 5 examples. We have that same employer who is an applicable large employer with at least 50 full-time equivalent employees. Coverage being offered through SchoolCare, which is a self-funded plan. As always, the SchoolCare plan year begins in July, and all employees are offered family coverage and enroll when offered unless otherwise stated. The difference in these examples is the employer treats coverage as affordable based on the rate of pay safe harbor. For example number 11, we have a new hire during the year who subsequently terminates employment and declines COBRA. Abraham is hired on February 9th, 2017. He is eligible for health insurance on the first of the month following 30 days employment. His employment is then terminated on June 30th, 2017, and he does not elect COBRA. Abraham then does have coverage from April 1st through June 30th and enrolls in the SchoolCare Yellow Plan. The employer offers the SchoolCare Yellow Plan at a cost of $635.50 per month for single coverage. The employee cost share is $0. Of course, the $0 cost satisfies the rate of pay safe harbor, which indicates that the cost must be less than 9.69% of the employee's rate of pay at the beginning of the coverage period, with adjustments permitted for an hourly employee. So we'll complete Abraham's 1095-C. In Part 2, we'll enter 07 for the plan start month. On line 14, for the months of January, February, and March, Code 1H is used as Abraham was not offered coverage. For the months of April through June, he was offered coverage for he, his spouse, and dependents, so we'd use Code 1E. Beginning in July, when Abraham is no longer employed, we would use Code 1H again, indicating no offer of coverage. On line 15, we enter the employee required contribution for the lowest cost plan only for the months in which Abraham is enrolled and eligible for coverage, and that cost is $0. On line 16, we'd use Code 2A for the month of January because Abraham was not employed any day of that month. In the months of February and March, Code 2D is used because Abraham was working at least one day during those months. However, he was in a waiting period his coverage was not effective until first of month following 30 days of employment. Then beginning in April, when he is enrolled in coverage through June, we would use code 2C. And lastly, for the months of July through December, we would return to using code 2A because he was not employed any days in those months. For Part 3, at the top, be sure to check the box that he was offered employer-provided self-insured coverage. On line 17, Abraham's information, name, and social security number are included, and we would use the boxes in column E for only the months that Abraham was covered, checking the months of April through June.
Example 12, a COBRA participant. Brian is a former employee who elected 18 months of COBRA coverage ending April 30th, 2017. Coverage is for Brian, his spouse, and child, January through April. The lowest cost plan information is not applicable as a COBRA participant, nor are any safe harbors. In Part 2, the plan start month is still 07. On line 14, code 1G is used for the months of COBRA coverage, as Brian was not an employee for any month of the calendar year. Code 1H is then entered for the rest of the year, as no offer of coverage was made. Line 15 is left blank, as Brian was not employed at any time of the year. On line 16, code 2A is used for all 12 months, as again, Brian was not an employee all calendar year. In Part 3, the top box again is checked off, and although Brian was not an employee, he and his family had coverage January through April, thus those boxes are checked off, and their information is entered in columns A and B.
Example 13 is a little more complicated, but certainly representative of a situation that you may have to report on. We have an employee who retires during the year and then turns age 65. Cheryl is a full-time health insurance eligible employee. She retires on June 30th and continues her coverage as a retiree. However, on October 1st, she becomes eligible and enrolls in Medicare and the SchoolCare 65 Plus plan. However, Candace, her spouse, is not eligible for Medicare and remains on the employer's plan as the subscriber beginning October 1, 2017. So we have enrollment January through September in the SchoolCare Green plan for both Cheryl and Candace, but beginning in October through December, the spouse, Candace, is the only individual covered. Regarding the lowest cost individual plan, we need to calculate this for the months that Cheryl is employed. The employer offers the SchoolCare Red and Green plans. The lowest cost plan is the Red plan at $819.50 a month for single coverage. The employee cost share is 20% or $163.90 per month. This amount satisfies the rate of pay safe harbor that the employer is using. For Cheryl's 1095-C form, Part 2, we indicate 07 for the plan start month. On line 14, for the months of January through June, we use code 1E, indicating that minimum value coverage is offered to Cheryl and her spouse and dependents. Beginning in July, we use 1H, indicating there is no offer of coverage. On line 15, for the months of January through June, we enter the safe harbor dollar amount calculated on the previous slide. On line 16, for the months of January through June, we indicate code 2C that she is enrolled in coverage. But beginning in July when she retires, we use code 2A indicating that although she had coverage, she was not employed any day during those months. And in Part 3 of the form, we first must remember to check the box for employer-provided self-insured coverage. Then we list the covered individuals along with their social security numbers. Now for Cheryl, she was enrolled and provided coverage at least one day for the months of January through September, so those are the boxes checked off. But for Candace, her spouse, who remained on the plan the entire year,
Example 14 is an ongoing variable hour employee. Dudley is an ongoing variable hour worker. His employer has adopted the following ACA compliance schedule. Number 1, standard measurement period May 1st through April 30th. Number 2, a standard administrative period May 1st through June 30th. And number 3, a standard stability period July 1st through June 30th. On July 1st, 2017, Dudley enrolled in the SchoolCare Yellow Plan. Reflective of the standard measurement period, it was determined that Dudley performed an average of 32 hours of service per week. Consequently, he was offered and accepted an opportunity for plan participation for the standard stability period. His coverage is single, and the employer offers the SchoolCare Yellow Plan. The Yellow Plan is $766.50 per month for single coverage. The employee cost share is 100%. Clearly, the $766.50 per month does not satisfy the rate of pay safe harbor. For Part 2, we enter 07 for the plan start month. Line 14 contains code 1H through June, as no offer of coverage was made to Dudley. Dudley and his family were offered coverage July through December, thus code 1E is entered. Line 15 has information for the month's coverage was offered. In line 16, code 2D is used through June, as Dudley was in a non-assessment or measurement period. Code 2C is then used for the months he enrolled in coverage. Moving down to Part 3, we check the box again for employer providing self-insured coverage. Dudley's information is listed, including his Social Security number, and the months of July through December are checked, as that's when Dudley had coverage.
And our last example, number 15, is a seasonal worker reclassified to full-time status. Eileen was hired July 1, 2017 as a seasonal worker, and on September 1st, she was then hired on as a full-time health insurance eligible employee beginning on the first day of employment. Eileen, however, did waive coverage. We still must complete the lowest cost individual plan for the 1095 reporting. The employer offers the SchoolCare Yellow Plan at a cost of $678 a month for single coverage, and the employee cost is 50% or $339 per month. This amount does not satisfy the rate of pay safe harbor as 9.69% of the employee's rate of pay. In completing the 1095C, Part 2, we would still enter 07 for the plan start month. On line 14, for the months of January through August, code 1H is indicated. On line 14, for the months of January through August, 1H is entered, indicating no offer of coverage. Beginning September through December, code 1E would be indicated as coverage was offered to Eileen and her family members. On line 15, for the months of September to December only, the cost information would be entered for the employee required contribution for the lowest cost plan. On line 16, for the months of January through June, when Eileen was not employed, code 2A would be used. Beginning in July, when Eileen was hired as a seasonal employee, code 2B would be used, indicating that she is a part-time employee. On line 16, for the months of September through December, no code is entered, as Eileen was neither enrolled in coverage nor did the cost of the coverage meet a safe harbor provision. And lastly, in Part 3, it would be left entirely blank as Eileen waived coverage.
Now that we've discussed Form 1095C and possible scenarios, let's now move to the transmittal form, Form 1094C. Here is Part 1 of Form 1094C. This is a transmittal form to report aggregate level data. In Part 1, complete numbers 1 through 8 with basic ALE information, including name and contact info. Leave lines 9 through 16 blank unless you are a designated governmental entity. Line 17 is grayed out and reserved, thus leave this blank. Line 18 asks for the total number of 1095C forms you'll be submitting. Line 19 asks if this is the authoritative form for the employer. Typically, there is only one Form 1094C per employer group. Those who marked this box no only need to complete Part 1, although most groups will be marking this yes.
On Part 2 of the 6056 1094C transmittal form, we have first line 20. Here's where you indicate the total number of forms 1095C that are being submitted. Generally, this is the same number used in Part 1, unless you're reporting on behalf of another ALE member. On line 21, the question is whether the ALE is a member of an aggregated group. For most of you, you'll be entering no. And if you do, you do not complete Part 4 of the form. On line 22, this is certification of eligibility. And you definitely want to check all that apply, as it can impact your ability to avoid penalties under the pay or play provisions. You will note that there's really only two options now. B and C were available previously through transition relief, but are no longer available. So your choice is, do you meet any certification of employee under A, the qualifying offer method, or D, the 98% offer method, or both? Let's take a closer look at Box A, qualifying offer method. It is an alternative reporting method that indicates the employer is providing minimum value plan to its employees, and the cost for this employee-only coverage does not exceed $97.38 per month for 2017, and that at least the minimum essential coverage is offered to spouses and dependents. The offer must be for all months during the year in which the employee was a full-time employee and the employer was subject to shared responsibility rules. This box you would check off if you were using the Federal Poverty Limit Safe Harbor as demonstrated in examples 1 through 5 earlier in the presentation. And Box D, the 98% offer method. This indicates that an employer is making an offer of affordable coverage for all months during the calendar year that meet minimum value to at least 98% of its full-time employees. If this is the case, you most certainly want to check this box. Hopefully, as an employer, you'll all be able to check this box.
Moving down to Part 3 on Form 1094C. This is summary information for all employees, used to report certain information on a monthly basis. We'll review these columns in the next few slides. In column A, if minimum essential coverage is offered to at least 95% of full-time employees and their dependents for an entire calendar year, enter an X in line 23. If minimum essential coverage is offered for only certain months, enter an X in the Yes checkbox for each applicable month. If an employee is in a limited non-assessment period, i.e. a waiting period or an initial measurement period, they are not counted. Moving on to column B. If you checked off item D in Part 2, line 22, indicating the 98% offer method, you do not need to complete column B here. If not, you'll need to report full-time employee counts for each month of the calendar year. Again, do not count those in a waiting period or a limited non-assessment period. For column C, you'll report the total number of employees. Use either the first or last day of the month, the 12th day of each month, or the first or last day of the first payroll period for the month to report this. And in column D, you'll indicate if the employer is part of a controlled group. If you need additional information or resources, you can visit these links for form instructions and frequently asked questions.
Regarding IRS communications to large employers, some of our member groups have reported to us that they've been notified by the IRS that at least one of their employees have received marketplace subsidy. We strongly recommend appealing if the employee was offered coverage and send along information as proof to the IRS. If an appeal is approved, the IRS will ask for a letter clarifying that all plans meet minimum value. Good news, SchoolCare's actuary has produced a letter which we can provide to you. If needed, please reach out to one of our staff members. In addition, We understand and have notified you that the IRS will be sending communications regarding penalties for the 2015 calendar year. We have yet to see one of those letters, but if you receive one, please note you must reply within 30 days, and SchoolCare is here to assist you in providing any supporting documentation. And lastly, our next steps. All employers should send any needed updates and changes to SchoolCare by December 13th. This includes new enrollments, terminations, adjustments, and any individuals with missing Social Security numbers. SchoolCare will capture this data and provide a file to you, the employers, by December 20th, 2017, containing all covered individuals, Social Security numbers, and dates of birth, along with the months covered, the information that you need to complete Part 3 of the 1095-C forms. As employers, you have 2 additional reporting deadlines. By January 31st, 2018, you must provide the individual 1095-C forms to all those employees and non-employees covered under your health plan. In addition, you then must take copies of those forms along with the 1094-C transmittal form and submit to the IRS either by February 28, 2018 if reporting by paper, or if electronically by April 2nd, 2018. Well, this is a wrap, folks. We're certainly here for questions. You can reach out to SchoolCare staff at 1-800-562-5254.